Welcome to the deep dive. We're jumping into a stack of sources you've shared with us, hitting on the latest movements shaping the world of cryptocurrency, finance, and global economic policy.
Yeah, quite a mix today.
The goal today is really to cut through some of the noise, maybe pull out the most interesting nuggets of insight, and help you see how these pieces are starting to fit together in, well, new ways.
Exactly. Our mission for this deep dive is to understand the current crypto market signals, look at some really significant steps towards mainstream financial integration.
Which seems to be happening faster now.
It really does, and examine the impact of these ongoing regulatory and policy shifts.
Okay, let's unpack this.
Where should we start? Bitcoin.
Let's do it. We're going to start right at the core of the crypto market, Bitcoin. Our sources are pointing to some potentially significant signals right now.
Okay.
One that caught my eye is something called the hash ribbons.
Ah, yes, the hash ribbons. So this is a metric that tracks miner behavior, specifically phases of capitulation and recovery.
How does it do that?
By looking at the relationship between the 30-day and 60-day moving averages of the Bitcoin network's hash rate, the computing power.
Right. And here's the key nugget from the sources.
Yep.
It just flashed a buy signal.
Oh, really? When?
For the third time this year, apparently. And, traditionally, this indicator has been pretty effective at identifying market bottoms.
Right, signaling potential entry points for long-term investors. It has a decent track record.
Exactly. But what's fascinating here, and what the sources highlight, is how this signal is appearing even near recent all-time highs.
Yeah, that is interesting. You'd normally expect that signal way down after a big drop.
Precisely. One analyst from CryptoQuant actually called it a smart move to buy the dip right now, suggesting the market has, quote, largely overlooked this particular signal.
Huh. Overlooked near the top. So if it's historically accurate at bottoms, but flashing near highs, what does that tell us?
Well, that's the question. And why does miner behavior, which the hash ribbons tracks, matter so much here?
Well, it links directly to their expectations, doesn't it?
It seems so. The sources note that miner reserves are holding steady.
So at what level?
Around 1.8 million BTC as of June 4th. So when miners are holding like that, rather than, selling off to cover their costs,
it often suggests they anticipate further price increases. They're not dumping, even with prices pretty high.
Right. They're in accumulation mode, or at least not distribution mode.
And this sentiment, this holding pattern, is it backed up by anything else, like network activity?
Yeah, actually, the Bitcoin hash rate itself has reached new all-time highs.
Wow. So that confirms strong network security and, I guess, high confidence among miners. They're investing in more gear.
Definitely putting capital to work. And we also saw data, like from Glassnode, suggesting the typical profit-taking euphoria. Well, it's fading.
Oh, that Glassnode point is really telling. Less euphoria.
Yeah, they note that this less intense, more nuanced, less euphoric behavior indicates a maturing market.
Okay, so maybe Bitcoin is growing into a major macro asset, as they put it. More strategic players, less chasing quick profits.
That seems to be the implication. It's behaving differently than in past cycles.
Interesting. And where is Bitcoin trading right now, according to the sources?
Right. Well, as we're talking, it's near $104,768, or about 103,945 USDT, depending on which feed you look at.
Okay, so still elevated.
Okay.
And analysts are probably pointing to macro stuff too, right?
Oh, absolutely.
Hmm?
They're quick to point out that macro factors, things like tariff uncertainty, potential Fed rate cuts, these will be key influences on whether this hash ribbon signal actually leads to another significant rally from here.
Makes sense. It's not just crypto in a vacuum.
Not at all. So keeping an eye on sustained consolidation above 105K seems like the next key level, according to these sources.
Right. That could confirm that bullish continuation they're talking about.
Exactly.
Okay, so shifting gears a bit from those sort of technical market signals.
Yeah.
What about integration? Stablecoins seem to be making moves.
Yeah, let's look at something concrete happening right now.
Okay.
Stablecoins really stepping onto the big stage, integrating more deeply with traditional finance.
And the big news today, obviously, is Circle.
This is a major story today. Circle, the issuer of USDC, the world's second largest stablecoin, officially debuted on the New York Stock Exchange.
The NYSE. Wow. That happened today, June 5th.
Yep, today. And the details from the sources are interesting, too.
Like what?
Their IPO was actually upsized several times. Huge demand, apparently.
Really?
Yeah, ultimately pricing 34 million shares at $31 each. That values the company at $6.9 billion.
That's quite a valuation. Weren't they targeting lower initially?
They were originally targeting fewer shares at a lower price range, like $24 or $26. And it's worth noting, this was their third attempt to go public after previous delays.
Third time's the charm, I guess. Shows perseverance. What did their CEO say?
Circle CEO Jeremy Allaire. He framed the listing as a milestone for, his words, upgrading the world to an internet-native financial system.
Bold statement. Any reaction from others in the industry?
Yeah, got congratulations from folks like Michael Saylor and Coinbase's Paul Grewal. So a lot of positive buzz there.
Okay, so beyond just another tech company listing, what does a major stablecoin issuer going public on the NYSE really signal?
Well, it clearly signals growing institutional trust, right? Trust in stablecoin-backed businesses and the underlying infrastructure.
And it highlights the rising importance of tokenized dollars in global finance, not just for trading crypto, but maybe as like core financial plumbing.
Exactly. The sources even noted expected stock opening price predictions between $42 and $44.
Above the IPO price.
Yeah, suggesting strong initial market reception. Trading under ticker CRCL, by the way.
Good to know. And this isn't the only integration piece we're seeing, is it? There was something about JP Morgan.
Right. Another major one the sources highlighted involves JP Morgan, the largest U.S. bank.
What are they doing?
They will reportedly allow clients to borrow against crypto ETFs.
Borrow against crypto ETFs, like use them as collateral.
Seems so, yes. Starting in the coming weeks, according to the report.
Just ETFs. Just Bitcoin.
Initially, they're targeting BlackRock's iShares Bitcoin Trust, IBET, which, already has a massive $70.1 billion in net assets.
Wow, $70 billion. That's huge. Why does this matter so much?
Well, it's a major leap in crypto's mainstream integration, particularly for wealthy investors, right?
Because they can get liquidity without selling their Bitcoin exposure.
Exactly. They can access cash without triggering a taxable event or losing their position. And potentially, this means digital assets could now count toward net worth calculations for loan eligibility.
Ah, okay. Think about the implications of that for asset classification. That's a big step.
It really is. So you have Circle bringing stablecoins onto the public market via the NYSE, and JP Morgan allowing borrowing against Bitcoin ETFs.
These aren't just minor events. They feel like pretty significant steps in embedding digital assets into the existing financial structure.
Absolutely. And all this growth and integration doesn't happen in a vacuum, of course.
No, it's happening against a backdrop of intense activity on the regulatory and policy chessboard,
which our sources cover extensively. Let's maybe start with the U.S. first.
Sounds good. What's happening there? Tax reform.
Potential cryptocurrency tax reform is definitely a hot topic. Wyoming Republican Senator Cynthia Lummis is actively advocating for amendments to a tax and spending bill.
Okay, Senator Lummis, what's in the proposal?
Well, the proposal, which she co-drafted with Senator Kirsten Gillibrand, aims to extend the wash sale rule from securities to crypto.
The wash sale rule. Okay, that could generate significant tax revenue, I imagine.
Potentially billions, yeah. But interestingly, it includes a provision to exempt Bitcoin miners from reporting gains and losses under this rule.
Exempt miners. Okay, that's specific. Who did she submit this plan to?
To the Senate Finance Committee Chairman, Mike Crapo.
Got it. Any other political context?
Sources noted that Finance Committee members consulted with President Donald Trump on this plan.
Oh. Did he show interest?
He reportedly showed interest in one specific part, the work account benefits provision within the plan.
Okay, so if this framework passes, what's the big picture significance?
It would establish the first systematic tax framework for crypto assets in the United States. That's a massive development, potentially providing clarity, but also new obligations.
A huge step. And speaking of President Trump and policy impacting industries, the sources also mention his tax legislation's impact on electric vehicles, right?
Yes, specifically that it will largely eliminate the $7,500 tax credit for certain Tesla models and other EV buyers earlier than planned.
Ouch. Any idea what the financial impact might be?
JP Morgan analysts actually suggest this change could result in a substantial hit to Tesla's annual profits, maybe $1.2 billion.
$1 billion. Wow. How's Elon Musk reacting?
Not well. According to the sources, he's noted as opposing this change quite strongly, describing it as disgusting.
Strong words. Is he doing anything about it?
Reportedly lobbying Republican lawmakers, including appealing directly to House Speaker Johnson, to try and retain those EV credits. We're just reporting what the sources say here, of course.
Of course, just laying out the information. Okay, stepping back from the U.S. specifically, what about global policy points? Europe?
Yeah, broadening the view, we see similar influences globally. Traders are apparently reducing expectations for European central bank rate cuts.
The ECB.
Less cutting. Yeah, they're no longer fully pricing in a 25 basis point cut this year. Money market expectations dropped to about 23 basis points by December.
Why the change?
It follows comments from ECB President Christine Lagarde suggesting the rate-cutting cycle might be nearing its end. Less dovish monetary policy, can impact risk assets globally.
Definitely. What about the Fed? Any signals there?
We also saw Federal Reserve Governor Kugler noting an increase in layoff notices since the start of the year, which was reflected in the Fed's Beige Book.
More layoffs. What's her policy stance?
She stated that if inflationary risks persist, she supports maintaining the current policy interest rate. So holding steady if inflation doesn't cooperate.
Okay, so both ECB and Fed potentially less accommodative. That's a key macro factor for crypto, for sure.
Absolutely. And the global trade picture, that's still in flux, too.
What's the latest there? U.S.-China.
Chinese President Xi Jinping and U.S. President Donald Trump held a phone conversation about trade relations. Xi apparently highlighted recent Geneva talks.
It emphasized what?
Dialogue and negotiation based on equality and mutual respect for a win-win outcome.
Standard diplomatic language, perhaps, but communication is happening.
Okay. Any other trade points? Japan?
Yeah, Japan's Minister for Economic Revitalization also reiterated Japan's stance on requesting the U.S. to fully reduce tariffs.
So those trade tensions are still very much simmering.
Seems so. But it's not just the major global powers influencing crypto, right? We're seeing growth in other places, too.
Like where?
Kyrgyzstan, for example, reached a milestone with 126 licensed crypto companies and a reported $4.2 billion turnover.
Kyrgyzstan. Wow. Okay. Shows growth can pop up in unexpected regions.
Definitely. And companies themselves, they're clearly anticipating and positioning for this evolving regulatory landscape.
How so? Any examples?
Zebek Network acquired a compliance platform called Baitnox.
Specifically to prepare for regulatory advancements under the EU's MiCA rules and the UK's FCA regulations.
Oh, getting ready for MiCA. What's their timeline?
They plan to integrate this platform for regulatory registration by the second half of 2025. So this isn't passive waiting, it's active preparation.
Proactive compliance makes sense.
And beyond these finance-native companies, we're also seeing businesses from completely different sectors adding crypto assets to their strategies now.
Oh, yeah. Like who?
Well, one example from the sources is Pharma.
Pharma, a biopharmaceutical company.
Yep, NASDAQ listed. Their board just approved purchasing $1 million worth of Bitcoin for their treasury reserves.
$1 million in Bitcoin for a pharma company? Why?
Their CEO, Eric Weisblum, explained the reasoning. He called it a strategic move to diversify assets.
Okay.
Include a digital value storage tool with growth potential, hedge against inflation, and ultimately enhance long-term shareholder value.
So it's being treated as a serious balance sheet strategy now, not just speculation.
Seems that way for them. Another interesting corporate move noted involves Truth Social.
Owned by President Trump, right. What are they doing?
They filed an S-1 document with the SEC.
An S-1? For what?
For a Bitcoin exchange-traded fund application.
Truth Social applying for a Bitcoin ETF.
That's what the filing indicates. An S-1 is typically that initial registration form needed before listing securities publicly, so it marks a clear step into the cryptocurrency market for them. Again, just reporting the filing details here.
Understood. Interesting move. Okay, so lots happening on the corporate and regulatory fronts. Any other quick market snapshots from the sources?
Yeah, just for broader context, they touched on a few other movements. Spot gold saw a short-term dip, trading around $3,366.08 per ounce.
Stock.
Major U.S. stock indices recovered earlier losses. The S&P 500 and NASDAQ Composite showed modest gains when the sources were published.
Any specific crypto assets mentioned?
BNB dropped below 660 USDT at one point.
Okay.
And interestingly, Ethereum weekly active addresses hit a record high.
A record for Ethereum active addresses. How high?
Over 17 million. Shows significant underlying network engagement, even if the price isn't making headlines at the moment.
Yeah, that network activity is always important to watch.
Okay, wow. We've covered a lot of ground in this deep dive.
We really have.
From reading those Bitcoin hash ribbon signals and thinking about miner behavior and maybe fading euphoria signaling a maturing market.
Right, through to those major corporate and financial maneuvers, Circle going public on the NYSE, JP Morgan letting clients borrow against Bitcoin ETFs.
Huge steps. And we also looked closely at how government policy is weaving through all of this.
Definitely. From potential U.S. crypto tax frameworks and those EV credit debates.
The global trade talks between the U.S. and China, Japan's tariff requests, and what the ECB and Fed might do with interest rates, it all connects.
It really does. When you think about all these pieces together, what's really striking is just the sheer pace of change.
Yeah, and the increasingly tangled relationship between the traditional financial world and this digital asset space. It feels like the lines are blurring faster than ever.
Completely agree.
So what does this all mean for you, listening in? I think it underscores that understanding this rapidly evolving ecosystem requires looking beyond just the price charts. Right.
Absolutely. You need to consider the complex interplay of the underlying technology, the regulatory developments, broader macroeconomics, and even, specific corporate strategies.
It's a multi-layered picture.
Definitely.
And here's where it gets really interesting, perhaps something to chew on.
Okay, let's hear it.
Consider this. You've got major traditional finance players like JP Morgan actively integrating crypto assets. You have companies from diverse sectors like biopharma, Silo Pharma, and social media, Truth Social, adding Bitcoin to their strategies. And you have governments worldwide actively grappling with how to tax and regulate this whole space.
All happening simultaneously.
So the question is, are these developments just the final stages of digital assets carving out a permanent, maybe complex but undeniable place in the global financial system?
Or is there another possibility?
Or are they merely early skirmishes in a much longer, perhaps more unpredictable battle for dominance, legitimacy, and integration? Where do you think we are in that process? What do you think?